An urgent warning to all investors, including stocks, crypto, and real estate. A few things I want you to be aware of with the current environment and everything going on. So with that being said, let's get into it and discuss all the details. All right, so now that the stock market has officially dipped into bear market territory a few times so far this year, the mentality of buying the dip is likely no longer in place, but rather I want you to start thinking about selling the rip, because that is where the real opportunity is in this market right now. But don't get me wrong, there are still some great buying opportunities across certain indices and or certain specific stocks. But the big opportunities are on the downside right now because we are officially in a bear market and the Federal Reserve has basically committed to crashing the market and, of course, crashing the economy with trying to tame down some of this inflation by raising interest rates. So I want to get into that as well, but I quickly want to talk about what we've been experiencing here in the stock market over the last week and a half or so. So we've been actually experiencing the market trending up a little bit. Now, is this the bottom and is it time to get in and buy? No, it's not. This is highly likely just a bear market rally, as in after we see a big drop in the market, typically buyers step in and or people start covering their short positions, which drives the market a little bit higher. And across the indices that we've been experiencing lately, anywhere between about 2, 3, maybe 4, or even 5% gains. And then again, there's always stocks like Tesla, which is up over 20%, right? But is this the opportunity to jump in and start buying long term? Well, in my honest opinion, no, it's actually not, because this is just a great opportunity to either exit positions and or enter into new shorting positions, which is also exactly what I did just a couple days ago on Monday afternoon. I ended up shorting the market, and as of then, the market has fallen off of a little bit of a cliff, and my positions are currently sitting pretty nicely in the green as of this recording. So I want to talk through some of the details on this and let you know where we're likely to see this stock market going, what we're likely to see with crypto, and of course real estate, all the markets, and of course all the investors as far as what I want you to be aware of going forward, because there's some really unique things going on right now that we typically don't experience. But like I said just a minute ago, the Federal Reserve has already committed to crashing the economy and of course crashing this market as well. So we want to take advantage of that, and also I want you to be aware of what to watch for with the Federal Reserve, because in my honest opinion, I truly think that the Federal Reserve is going to pivot here at some point, probably sooner than later, probably within the next few months or so, and probably reverse their policies, which will ultimately take the markets and reverse them pretty rapidly. So some pretty interesting things going on. At the same time, I also want you to be aware of this as well. We need to look at kind of the macro picture, right? So of course, we can always look at the markets and think, okay, markets are going up, markets are going down, the real estate market is tightening up, the crypto market has fallen off of a cliff and it's now in the gutter. And again, I'm not saying anything bad about crypto. I do like crypto myself, but I'm just saying this is going to likely be the hardest hit market out of all of them is crypto, simply because it is the most speculative market out of all of them as well, probably followed by stocks and then real estate. But what I want you to be aware of going forward too is pay attention to some of these headlines. I've been seeing a ton of headlines lately about all of these different economies, different companies, businesses, all of these different sectors out there right now that are laying off massive amounts of people, like companies. For example, Tesla just announced the other day that they are closing down their Silicon Valley, office, laying off 200 people. That's just one example, and I've seen tons of these different examples out there where all these companies are going bust, they're going bankrupt, they're closing up their doors, they're laying off hundreds or thousands of people. This is something we got to watch here, because whether the Fed actually crashes the market or not, which again, they're pretty much in the process of doing that right now, this is turning into somewhat of a self-fulfilling prophecy, because we've been hearing about it for so long now. Recession is upon us, and therefore businesses, companies, all these places are starting to tighten up and thinking, hey, we need to start stockpiling cash to be ready for this recession when it actually arrives here, because we don't know. Is it going to be another 2000? Is it going to be another 2008? How deep is it really going to be? How bad is it going to get? How prolonged is it going to be? That's a good question. Nobody knows the answer to that right now, but maybe the Fed does, because they're going to continue on with their policies, as what they've said is they want to bring inflation down to 2%. And we're currently sitting at almost 9%. So figure that one out. Do you think they're going to bring it down to 2%? Probably. Is it going to be in the next 3 months? No. Is it going to be in the next 5 years? then probably, yeah. Within 5 years, they can probably achieve it. But within the next year, probably highly unlikely, unless they take some really dramatic measures, and then we're going to be falling into a really serious situation, right? So anyway, what I want you to be aware of is this market and the buy the dip mentality. Don't get me wrong, I love it. But at the same time, you also got to be fluid. The deal with the market is you need to be nimble. You got to be on top of your game because the market can be pretty vicious. If you've ever been trading or investing in the market for any length of time, you know that thing can be pretty mean at times, right? You enter into a position and immediately it rips the opposite way and you're like, hey, wait, I just bought. What happened now? Now it's down 3% and I just bought like 3 seconds ago. You know what I mean? So been there, done that. And I'm guessing if you've been in the market for any length of time, you know what I'm talking about, right? So the fact of the matter is, when the markets change, you also need to change your approach. So don't get me wrong, the buy the dip mentality is great, but even better is sell the rip because the market falls significantly faster. Which, by the way, this is not investing advice in any way, shape, or form. It is not advice in anything. So I'm just simply telling you some things that I want you to be aware of. I can't tell you what to buy, what to sell, what to invest in, things like that, but rather I can bring some things to your attention that I'm also watching and that I want you to be aware of going forward. All right, so here's what I want you to listen to out of the Fed. So recently they've been jacking up for interest rates very significantly and very aggressively, right? So as of their last meeting, they raised interest rates by 75 basis points. Obviously, you probably already know this, but this is the biggest raise in interest rates that they've had since 1994. The good old 90s. Remember those days? Zuba pants? And what else? I'm not sure, but I know Zuba pants were a huge thing, at least where I'm from anyway, right? So the fact of the matter is, we need to watch this going forward because, like I said, the Fed has committed to crashing the market and they think that they're going to tame down this inflation. Unfortunately, they're not going to with the policies that they currently have in place, right? They have the wrong tools for the job right now. So what I want you to do, pay attention to what the Fed is saying and what they're doing going forward, which, by the way, if you ever listen to Jerome Powell, the chairman of the Federal Reserve, speak, he speaks very slowly and he filters his words very, very closely because he knows, just as well as we do, anything that comes out of his mouth can whipsaw the market either direction in multiple percentage points, right? So it's a matter of ripping the market higher or collapsing the economy based on just a few words that he says. He knows that, and he is very careful with the words that he says. You can tell when he speaks, he's very careful about the words that are coming out of his mouth. But the fact of the matter is, as they continue to move forward through the rest of 2022, pay attention to what they're doing with their policies. Here's what I would anticipate. I would anticipate in September, they're probably going to pause on raising interest rates. Now, at the point right now that we're looking at this situation, we're thinking, nah, there's no way. They're going from 75 basis points and they're going to pause in September. Here's why. Because basically over the summer here, depending on what happens with the economy, what happens with inflation, what happens with the stock market, they may be forced to pivot because as this thing continues to roll over, the economy crashes and burns, the whole thing skids out and burns up our knees, things like this, and we start to see the stock market roll over and maybe go down another 10, 15, 20, 30%, which, by the way, that is what some of the Wall Street firms and big banks are actually anticipating right now, is anywhere between a minimum of 10% and even another 30% lower from where we're currently sitting right now. So, again, got to be aware of this. If this happens, again, in the event that this happens, we see the stock market collapse onto itself once again. If we see it down another 15, 20, 25, 30, maybe even more percent than that, do you think the Federal Reserve is going to stay course and remain with their policies, jacking rates at record paces? Highly doubt it, because they're going to be looking at the situation saying, we can't be doing this. We're collapsing everything in front of us. We cannot continue on with these policies. We need to pivot or we need to pause, right? So that's what I would anticipate them doing, is probably in their September meeting coming out, pausing, or at least if they do that, rather than raising rates as aggressively as they are, as in 50 basis points, 75 basis points, they might even bring it down to 25 basis points or even say, we're going to pause, we're just going to wait and see. In other words, they don't know what else to do. They've played their cards and they don't have a clue on what to do, right? So as they come out and start talking about pausing, Once they indicate that they're going to pause, get ready, because they're probably going to come out the next meeting after that and say, just kidding, we're going to start cutting rates because the economy's, struggling along. It's very sluggish. Things are moving very slowly. We want to encourage some growth in the economy once again. One more thing here, perfectly timed right before the midterm elections. Is that a coincidence? Highly doubt it. Anyway, just have to throw that out there because you got to keep this into consideration as well, as we have the midterm elections coming up in November of this year. So what are people going to be feeling when they go out to the polls if their stock portfolios, their retirement accounts, and things like this are down 30, 40, 50%? Are people going to be very happy? No, not very happy at all, right? So something else out of this equation that I want you to be aware of. So in the event that the Fed comes out and says they're going to pause and or they're going to reverse policy, as in pivot by printing up more money with quantitative easing, they're probably going to call it something different again. Remember all these different things that they've had over the many years they've had? Quantitative easing, 1, quantitative easing time 2, quantitative easing 50 million. You know what I mean? Like, they've had so many quantitative easing programs. They've literally been printing money since 2008 when the last recession was put in place. Well, not technically the last one, but the 2008 recession, they were literally printing money up until just a few months ago, right? So something else you got to consider is as soon as they come out and say that they're going to pause and or pivot on their policies, as in reverse, and start cutting rates once again, there's your opportunity, okay? That is likely going to be when the market has capitulated. In other words, the market has gone down very, very fast, very, very significantly. All the sellers have liquidated their positions because it's scary. It's very scary. When you see capitulation, we're likely going to see at the same time the Federal Reserve step in and say, just kidding, we're going to reverse policy and we're going to start printing a whole bunch of money once again. $100 billion a month, or some ridiculous amount of money like they've been doing for many, many years now, since 2008. So when they do this, this is going to be a massive, massive buy signal. Again, I'm not giving you advice. I'm just some dude on the internet, okay? So the fact of the matter is, do your own research. I can't tell you what to buy. What you want to buy and your investment opportunities and your investment objectives are very different than what mine are. And everybody's objectives are very different, okay? Some people want to get in and hold forever. Some people want to jump in and hold for 3 minutes. Some people want to jump in and, buy something and hold it for a week. Things are very different here. So some people like to buy into indices. Some people like to buy individual stocks, all across the board. Some people like to focus on dividend-paying stocks. There's a lot of different opportunities. The fact of the matter is, you got to do your own research, okay? Do the due diligence now. Figure out what it is that you want to buy, figure out what it is that you want to own, and figure out what you think has the best opportunity for you and your investment objectives going forward. Get those on your radar. So when this market really falls off a cliff and we see capitulation and we see the Fed reversing policy and starting to cut rates and all of a sudden start to print money again, in other words, quantitative easing, when they start doing that again, that is likely going to be your signal that the bottom is in and it's time to jump in, okay? So as we continue to move forward on this, of course, I'll continue to keep you posted with everything going on. But again, not advice in any way, shape, or form. I want you to be aware of what is going on here. You got to read through the smoke and mirrors, because that's all it is pretty much with everything out there right now. With all this Fed talk and everything like that, it's all just a big hocus pocus show. And you got to read through all of it to see where is the real opportunity, what is actually going to be happening, and how can I possibly make some money off of this, right? Everybody's going to be looking for the same things. Everybody wants to know where the opportunity is. Where is the bottom? Where should I buy? Well, the signals will be there. When the signals come up, it's very obvious. Look for capitulation. That's all you got to look for. When you see the capitulation, it's either going to be a short-term bottom. It's going to be a bottom of some kind. And I can always make other videos talking about capitulation, what to look for. But when you see it, it's pretty obvious, right? It's like what the people say. It's like it sticks out like a sore thumb, right? An old time saying, right? Yeah, obviously. So anyway, these are a few things that I want you to be aware of going forward. But for right now, we're likely going to see this market continue to fall off a cliff. The crypto market will likely be hit the hardest because it is the most speculative market. And if people need cash, they're likely going to pull it out of the crypto market versus the stock market. The stock market, in my opinion, will likely be the second most hardest hit market. Just because, again, it is also liquid. You can go in, you can sell stocks in 3 seconds and be in cash literally pretty much instantly, right? Same thing with crypto, but people would be more likely to sell their crypto in most cases versus selling stocks. So I would anticipate crypto will get the hardest, stocks will get hit the second hardest, and real estate will fare the best out of all this because real estate is not really that liquid. You can't go out and sell a house today and have cash in your pocket tomorrow. Maybe in some cases you can, but for the most part, the vast majority of people cannot do that, right? So I do anticipate the real estate market to go down depending on the market that you're actually in around the country, maybe 10%, maybe 20, maybe 30 in some very selective markets. But again, the real estate market is probably just going to present an amazing buying opportunity if you're in the market to buy a home to live in, an investment property, something like this. Again, this is a great opportunity right now. With what the Fed is currently doing, it's setting the stage for an amazing opportunity some point relatively soon here. So anyway, I just wanted to point out a few things that I want you to be aware of going forward with the current environment that we're in right now, some of the signals that are out there, and what I want you to look for going forward, because this is setting the stage for a pretty cool opportunity. So again, I'll be here for you, keeping you posted with all these details as this thing continues to transpire and as we get more details on this. So again, make sure to subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the other thousands of videos here on the channel. Until next time, have a good one, enjoy your day, and I'll catch you again later in the next video.